Thursday, September 16th, 2021, Monaco 64, home of alternative economics and contrarian views. I spoke with Arpad of Starpath Academy a month or two ago about what happened in Romania in the 1990s, the hyperinflation they had, how the economy was running, and the more I look at things, what's happening here in the UK, and also probably in other countries, and that's not even talking about this crisis that we've had since March, this engineered crisis, in my opinion. Yeah, the more I think of what he told me and what I'm seeing here, it doesn't bode well for the currency. And of course, I've said many times that you need to be out of fiat currencies. And I know it is frustrating right now what's happening to the gold and silver price, to the paper price. Yes, the powers that be need to keep those prices under control, despite the fact that we're seeing the CRB index reach new almost 7-year highs. Look at this chart here just to show you. We're seeing, of course, power or energy prices go through the roof. A few days ago, I was talking about how natural gas was going up quite a bit, and that 5 was a key resistance. Well, we are way past $5 now in natural gas. We are down today 2%, but it's still at 5.36. And you kind of wonder if they're using this crisis as a cover or a distraction for what's really going on, for the fact that after 50 years of fiat currency inflation that we've had since Nixon closed the gold window, the system is imploding. They can't keep it going. Yes, they talk about tapering or maybe even raising rates eventually, but I'm getting to believe that there is no way out, of course. And there's a lot of uncertainty as well here in the UK. The other day or 2 days ago or yesterday, I forget, they told us, oh, no passports for you know what. And then they said, oh, we're going to keep that, though, as an option. And they also said more lockdown this winter is a possibility. There's a lot of uncertainty. How can you plan your business, or how can consumers, because we are in a Keynesian credit-driven economy, how can consumers plan their holidays or things like that, which are important part of the economy here in the UK. You've got the travel agents, you've got the airlines, the airports. They employ a lot of people. Yesterday, for example, I walked into town. I went into a travel agent to have a word with a lady there. And I was looking at maybe going away with my wife, maybe in November. But then I thought, what's the point of booking something if we might be under lockdown by November? So this morning I'm seeing more news that makes me more and more convinced that things are not going well. We are at the end of the rope for this system, because it's not fit for purpose anymore. We've been doing 13 years of money printing. We've been doing 13 years of keeping people consuming and borrowing and spending. And the economy is so out of kilter. It's become so financialized here in the UK, but also everywhere else. I'm not just having a go at the UK. It's just that I live here and I know more what's going on here. There's so many symptoms of financialization. There's very little real wealth production. All the economic or it's really a financial economy, is in the service economy. It's in gambling, speculation, borrowing. It's in the city of London, which is a casino. And we've forgotten about the real economy. That's what I'm trying to say. And I think commodities are going to reflect that massively, even if they lock this country down, this economy down again. You're going to see prices of everything go through the roof, everything that's fixed to the ground or tangible that you can touch. And I saw more news that will probably make this winter even more miserable, expensive, and actually literally dark. So I got this story from Bloomberg. UK gets closer to blackouts after fire knocks out cable. And that's what Arpad was telling me a few months ago about what was happening in Romania back in the 90s. There were blackouts. My wife actually tells me about the 1970s here in the UK. They had blackouts here too when you had the stagflation. And I think the same thing's happening now. So it says winter blackouts. This is from Bloomberg, as I said earlier. Winter blackouts are now a real possibility after a fire took out a key cable that ships electricity to the UK from France. Electricity is now so scarce in Britain that any more grid mishaps or unexpected plant outages could leave millions without power. So here we've been worried about saving the NHS, flattening the curve for something that really has a tiny percentage possibility of making you expire, and we neglecting everything else, right? Maybe it's that they don't want us to see what's really going on, that the economy, the infrastructure of the country is crumbling. Even before the fire, National Grid PLC's buffer of spare winter capacity was set to be the smallest for 5 years. Beyond the immediate chaos a blackout would cause, a prolonged shutdown could have severe economic consequences. Just as Britain emerges from the pandemic, power outages would send energy prices even higher, compounding concerns about inflation. Well, that's wrong as well. It's concerns about rising prices. Never forget the real inflation creators are at Threadneedle Street and Downing Street. And adding to the rising costs, businesses are already shouldering for raw materials. Now supply from France is set to be diminished, with half of the cable's capacity set to be cut off until the end of March 2022. The shortage will impact prices well into next year. The rest of the capacity is set to come online September 25th, but that will depend on the extent of the damage and whether the cable can be operated safely. National Grid sounded an early warning back in July that the UK's ability to meet peak demand would be more strained this year. For now, the situation looks manageable. We'll have a clearer view on any long-term impact of the IFA1 outage in the coming days, a spokesman said. Currently, we're still forecasting that we'll have sufficient margin to continue securely supplying electricity over winter. The interconnector outage doesn't necessarily mean a blackout today, but as the weather gets colder and demand picks up in October and November, the system will get even tighter. Andreas Gandolfo, an analyst at Bloomberg NEF, said. So there you go. I think there's a lot of complacency. People out there, of course, have been focusing on something else for almost 2 years, something to do with health. And the government and the Bank of England have been able to patch things up. I think there's a false sense of security because the government has basically been spending money like a drunken sailor to keep things going, to keep businesses from collapsing. But there's going to come a point where they can't do that anymore because the big money investors are going to say, this is not real. And that's when everything will kick off. That's when you will see the run to tangibles, the crack up boom, the hyperinflation. Yes, it's very frustrating to see what gold and silver have been doing of late, but gold and silver are the ultimate form of protection monetarily in terms of tangibles and also commodities. They're going to reflect, and they're starting to reflect the troubles with our currency and the economic system. And all the symptoms are there. Aside from the shortages, from the power problem, blackout potential, we've got social, political upheaval everywhere, in my opinion. So let's quickly look at where the markets are this morning. Of course, the markets, you could argue that the markets today are a false reality, I would say. And when do I think people will see that the emperor has no clothes? Well, I think it's all got to do with the currencies and commodities and gold and silver. And we could even see the stock market continue a lot higher. But eventually, there will come a time where people will be rushing to have anything that is real and tangible. And even if the stock market or the bond market doesn't correct that much lower, you could see trillions of dollars flow into real things. And that, as I've said before, would be like the Niagara Falls or Iguazu Falls in Brazil, Paraguay and Argentina, flowing into a garden hose. So right now, it's just before 9 a.m. London. We've got spot gold at 1786. Whatever that is, really. It's down $8. Range has been 1796 to 1782. We've got silver down 26 cents. It's very frustrating. It is a psychological war. It's very similar to the crisis we've had since March last year. They're trying to sell us a story about what's going on, and they're trying to do the same thing with money, and that's why they're trying to desperately to keep people away from real money, and that's why they keep doing this. But eventually, reality will rear its ugly head. So yeah, silver's at 23.55, right near the lows here. The high's been 23.98. The Dow futures down 43. The Nasdaq is down 9 points. S&P down 3 points. FTSE is up 12, just above 7,000. The currencies, we got sterling down 1/8% at 138.25. The euro is down 1/3 at 117.78. Dollars unchanged versus the yen, 109.35. Dollars up 1/4% versus the yuan at 644. Aussie dollar is down 1/3 at 73.09, and the dollar is up 1/8 versus the Canadian dollar at 126.40. The Kiwi dollar is unchanged at 71.09. And now to the commodities. Crude is continuing to race ahead. We're at $10 above the recent lows at 62. WTI right now is unchanged, but it's at 72.28. I think yesterday we were trading just below 71 when I made my video. High-grade copper is down 1.8% at 432. Natural gas is down 1.8%, but it's gone way past $5. As I said, it's at 5.38. And the 10-year yield is at 1.3%. It looks like that's the level the Fed and the Treasury want the 10-year yield at. It's not a real market anymore. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.